We've got a major disconnect in the AI sector. The US Semiconductor Index just surged over 6.3%, yet its key suppliers in Korea saw a massive sell-off. Now, this is not a sign that AI demand is failing, not at all. It's a calculated, strategic de-risking by major institutions just ahead of critical US inflation data. And we're about to break down exactly what that signal means for the US Open. Just look at this divergence. It's night and day. Over on the left, you've got Seoul, where the tech leaders are getting hammered. And on the right, the Philly Semiconductor Index is absolutely ripping higher. It's like the engine is screaming at full throttle while someone is siphoning the fuel tank. We have to decode this signal before New York starts trading. So that's the billion-dollar question, isn't it? It makes no sense on the surface. But the answer isn't in the headlines you're reading. Nope. It's in tracking the subtle, behind-the-scenes movement of capital by the largest funds on the planet. Okay, let's get into it. Here is our mission briefing for today. First, we'll nail down this disconnect. Then we're going to follow the money, unmask the capital flight. We'll see where it pivoted, identify the exact data point that's triggering all of this, and then we build our execution framework for the NASDAQ. Let's go. All right, first up, let's put some hard numbers on this, because the data shows a clear fracture in the global tech narrative, and inside that fracture is where we find our edge. Look, this is not just some minor daily variation. We are staring at a nearly 9-point spread between the main US index and its most critical upstream suppliers. That is a massive signal. It's telling us a strategic rotation is underway, and big money is using the Korean market as a tactical lever to shed risk. So let's get to the real story here. This sell-off was not a vote of no confidence in the future of AI. It was a very clean, two-part tactical maneuver by smart, experienced capital. First things first, key supply chain nodes, your SK Hynixes of the world, they'd already had a monster run. The market had priced in enormous expectations for the next-gen HBM chips. So that huge rally in the US index, it gave them the perfect cover for a classic sell-the-news event to lock in those massive profits. And second, and you really need to get this part, global funds used Korea to de-risk their books. They knew some high-impact US inflation data was coming, so what did they do? They trimmed their positions to clear the decks. This wasn't panic selling, this was professional risk management. Okay, so if they were selling these tech suppliers, where did all that cash go? Following that capital flow is everything, because it shows us where the market's real conviction is hiding, even while it's getting a little nervous about short-term tech valuations. A huge chunk of it rotated right into the physical backbone of the AI revolution. We're talking about power generation companies, the ones that are going to fuel these massive new data centers. These are hard, real-world assets. They're way less sensitive to swings in market sentiment, making them a pretty smart way to stay in the AI game through a bit of turbulence. And we saw the exact same pattern with capital rotating into defense and resource security. You know, with all the geopolitical chatter and inflation worries, investors want assets that give them some insulation from pure tech volatility. It's a textbook pivot into the real economy. So what this all confirms is that the long-term structural bull case for AI infrastructure is 100% intact. The market is just reallocating its chips, you know? It's moving from the high-flying designers to the companies that build the actual physical world that supports this whole revolution. Now, this entire complex rotation, all this maneuvering we've just tracked, it all comes down to a single number. The entire narrative is basically on pause, just waiting for this one trigger. This is the number 3.1%. That is the line in the sand for the core PCE inflation report. If that number comes in hotter than 3.1, it confirms that inflation is still sticky, and that defensive rotation we saw out of Asia was the right call. But if it comes in cooler, well, that could invalidate the entire move and send a flood of capital rushing right back into tech. This table right here, this is your playbook. It lays out the two most likely reaction paths for the NASDAQ. It's a simple, binary outcome. The market is coiled like a spring right now, and this data is what's going to decide which way it breaks. You need to know these paths before the numbers drop. And this right here, this gets to the absolute core of our entire strategy. The headline was the big, flashy rally in the US. But the real story, the actionable intelligence, came from the supply chain's reaction in Korea. That insight is what anchors our entire plan. All right. Time to translate all of this intelligence into a clear, actionable battle plan. We are shifting from analysis to execution, and we're focusing on the precise levels that matter. Watch 24,654. A clean break above that level confirms our long thesis.
A move below 24,313 invalidates the entire setup and you exit. The zone between these two levels, that is a no-trade zone. Wait for clear confirmation. Do not get chopped up.
Here is your final pre-flight checklist. Our target is the NASDAQ 100 futures. The key pivot is 24,654. Keep an eye on the 10-year yield. If it breaks above 4.35% on the data release, that's your signal to immediately shift to a capital preservation mindset. We log the result at 7:30 a.m. Eastern. So this is the ultimate question we're left with. Was this whole thing just smart money making a tactical adjustment before some data? Or was it the first tremor, the first real warning shot that we're approaching a structural peak in the AI cycle? The market's reaction to inflation will give us the answer and set the tone for the next several weeks.
We will log the results at 0730 EDT, no exceptions. If you want the Asia close before New York opens, subscribe. Be here.